everywhere.
Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Geopolitical tensions drag Indian equities lower. The Nifty sees its biggest one-day drop since October 2019. All sectoral indices trade with losses while broader markets see sharper cuts. The India Volatility Index has seen its biggest one-day jump since September 2018. The VIX has gone from 9.6 to almost 15 in just 6 trading sessions. Bajaj Finance is the top loser on Nifty today. The company, in its quarterly update, reported an AUM growth of 35%, while new customer acquisition stood at 2.5 million. And Titan is among the only 2 stocks gaining on the Nifty 50 index. It has held on to gains post its quarterly update. Good afternoon, Neeraj. It's a steep fall, while the VIX has shot up over 50% in just last 6 sessions.
Yeah, and Friday, people should have wondered why is it that people are taking this situation so lightly. Now you have the answer as to why it shouldn't have been taken too lightly. Look at that sharp uptick in the volatility as well. But yeah, I mean, this market now tells you what a legitimate reaction to what is arguably the biggest geopolitical stress that we've seen in the recent times. I'm not saying this will last and every day we'll have these corrections, but equity markets should take cognizance of the fact that there's danger lurking, and this is recognition of that fact. 1.8% lower, near 12,000 for the Nifty 50. And the Bank Nifty has been the leader, down about 2.28%, 730 odd points in the session. Very quickly, the heat map. As our headline stated, just a couple of stocks in the green, which is Titan as well as Wipro. Rest, even the tech names, the likes of Tech Mahindra, TCS, etc., have all gone off. Adani Port, after making a large successful acquisition, which is value accretive, is done about 0.6%, which tells you the mood in the market today. But look at the losers. That's where the real story lies. When we started off, there wasn't as bad an impact on a clutch of names. Now, there is a lot of stocks falling out. So Bajaj Finance corrects about 4% in trade. Maybe, just maybe, the street anticipated a much higher AUM growth number, and they've come in at 35%. I personally don't think it's bad to be growing at 35%, which means they're maintaining the growth at the asset quality which they have always maintained or wanted. But the street thinks otherwise. But a lot of other banking names, Yes Bank, SBI, GFC, etc., have all gone down. Essentially, no point talking about the losers because a clutch of them have fallen out. Just before we move to the broader end of the spectrum, just a couple of charts that I want to show. One is the premium on Brent crude, and 2 is gold and how the rallies have been there. So look at this. The Brent time spreads have taken off really, and look at this spike right now. This is arguably the highest spike that we've seen in a really long time. Iran tensions, naturally so, and because of the very same reason, gold prices have rallied at 2. And look at the kind of surge that we're seeing. The chart suggests that gold is near the most overbought level in 2 decades. But if indeed the stress continues on the geopolitical front, then there is no saying that this may not surge to even further levels. Let's wait and watch. Devina, broader markets too, which were really the driving forces the last few days, have taken a bit of a backseat as well.
Yeah, and in a big way. In fact, before going to that, just want to quickly look at the daily volatility and the move thereof. I'll run through this, but I just want the India VIX to come up first, and then we'll talk about individual stocks. India VIX yesterday, on Friday's session, was up about 10-odd%. Today's session, another 16.5%. So we are starting to look, it's almost looking quite critical for the Indian equity markets as well. Coming down to the broader market space, the mid caps and the small caps, the pain is much more amplified here as well. So about 1.92% lower. Godrej Agrovet, GMR Infra, a handful of stocks, just 6 to be precise, in the green. So even in the top 10 gainers, you've been pushed upwards with 3 or 4 losers out there. So Ipca Laboratories, Bharat Forge amongst that list. Losing out heavily is NBCC, Canara Bank, Aditya Birla Capital, India Bulls Ventures, Edelweiss, some of your bigger losers. Drawdown even in the small cap space. So looking at the small cap index, which is down more than 2%. What's losing opening is Care, which is down 10%. You've got Chennai Petro, Himadri Specialty Chemicals, which is down 5%. NCC, India Cements, all looking weak. What's doing okay is Suzlon. Remember, Friday session 2 and the last few days have been okay for Suzlon, but remember, it's a penny stock nonetheless. Very small ticket out there for Suzlon. NIIT Tech is up 1.3, and Laurus Labs. And just one more stock, actually, Force Motors. We were talking about how the December sales have been okay, 53% increment, and the stock in today's session, I think, is up about 8.5%. And similarly, SML Isuzu is the other one from the auto space, which is doing okay for itself. So handful of stocks which are doing okay for themselves, 4% higher for SML Isuzu. But aside from that, what's happening in the derivative space, the more liquid universe? Navneet joins in for that. Navneet, good afternoon.
Good afternoon, Davina, and thanks for that. Before moving on to the derivatives picture, I just want to point that Nifty slipped below the mark of 12,000, and this has happened for the first time since December 12th. Of course, that was the last month, but it's a steep fall of 230 points, and Nifty slipping. Remember, 12,000 is a psychological mark for this index. Also for the day, if you could just pull up the 50 DMAs for both Nifty Bank, we've slipped below that levels. Of course, DMAs become irrelevant when the markets fall on geopolitical tensions, but still highlighting with the recent trading data, Nifty slipped, or rather just is at the 50 DMA, and similar is the case for Nifty Bank. So today we breached two key moving averages. First was 20 DMA on both these indices, and then was 50 DMAs. Having said that, we've been highlighting how India WIX has been shooting up, and last just six trading sessions, it's gained over 50%, 10% higher on Friday, today up 16%. Today is the day with the 200-point fall. You are seeing fresh short positions coming by. That was not the case on Friday, because that was when we saw long unwinding coming in on the index futures. So pull up Nifty futures. Open interest has surged today by about 9 to 10%, at almost 12% now. Premium 2 has gone up, I guess, versus Friday closing premium. Pull up Nifty Bank. That's the space where more shorting has been witnessed today. 28% higher in terms of OI buildup. Of course, these could be some intraday positions as well, which could be unwound. We'll wait for the Bhav copy, but still current trends do suggest that there is fresh shorting on index futures. I've highlighted 50 DMAs in focus now. See where the closing comes about today, below that level, or we're just about to defend that mark or not. In terms of options data, I was looking at the 12,000 strike. It was a fight between the bulls and the bear there, but we've already breached that mark. 12,000 call today has added 12 lakh shares, and of course your out of the money call strikes like 100, 200, 300 have also witnessed open interest addition. But let's see 12,000 gets defended or not, but the 12,000 put as of now has seen OI addition of about 13 lakh shares with a premium of 59. If somebody is writing the strike, remember they are safe till the time index trades around the mark of 11,950 thereabouts. For individual stock futures, PSU banks are down today. Canara Bank, that stock slipped almost 9% in just two sessions. It's also fallen below its 50 DMA. On the future side, there are short positions being built up here. And of course, the stocks today taking support at its 100-day moving average. HPCL, your oil sensitives are in focus after crude oil prices have crossed the mark of 70. There is significant amount of shorting which has come in, also coupled with a good amount of volumes on the cash side. As you can see, White Line is projecting today's volume vis-a-vis the average volume of last 20 sessions. So that's not a great sign. Volumes are high on cash and good amount of build-up seen. The stocks also, by the way, are days low. And lastly, NIIT Tech, in a falling market, you have a stock which is hitting its lifetime highs. So good going, fresh long position seen. One of the outperformers of last year, up almost 38%. Remember, the company just announced buyback last month. Since then, we've seen this counter moving higher. The stock's just up 1%. There is significant build-up which is coming on the futures side, Davina.
All right, global cues are dominating trade today. Tensions between US and Iran are rising. Crude prices are at a multi-month high. Gold is at a multi-year high, in fact, a 7-year high to be precise. The global equity markets are taking a beating. So what is the likely scenario in case the situation deteriorates further? Let's ask Chris Watling of Longview Economics. Thanks very much for joining us, Chris, and a very good afternoon to you from India. Just want your sense on what happens now while we are taking, an approach that you will see a little bit of a supply constraint that could come in with regards to these geopolitical tensions from Iran. What does that do with regards to the overall global GDP suffering because of this issue?
Well, it really depends on how permanent the oil price move is, and to what extent we see that price moving higher from here. I mean, there's a good argument that quite a lot of the bad news is in the price. So, markets are forward-looking. We all know that that the risk of more strikes is there. If they're strong, clearly, and the retaliatory action builds, then clearly the oil price can move significantly higher. But I suspect a lot of it's in the price, and so the impact on global GDP probably won't be as dramatic as one would imagine. I mean, yes, it does take a little bit away from global growth with the oil price high, maybe 0.1, 0.2 on global GDP. But in the grand scheme of things, I don't think it's too dramatic. There's a risk there. People have been hedging portfolios to reflect that, and I suspect from here that risk, maybe it's a bit troubling for another week or two, and then I suspect we may well see it dissipate.
Well, no one can really pinpoint and say how bad this could get, but in terms of the worst case scenario, if we talk about the Strait of Hormuz and its impact, 20% in terms of oil supply could be shaved off, and that could have a very significant impact on oil prices. Where do you see the oil prices headed?
Well, as I say, I mean, there's a huge number of known unknowns, as Rumsfeld used to call them. I mean, we don't know what Iran is going to do in retaliation, but I think when one thinks about it and you sort of game theory it out, I mean, it's difficult to see Iran wanting to escalate this dramatically. Neither Iran nor the US really want a major war. There's just a bit of tit for tat and a bit of sort of showboating, if you like, and sort of demonstrations of strength. So, if we assume that Iran doesn't push the America too far, we can assume there isn't a major war, and hopefully they won't shut off the Straits of Hormuz, of course, or cause trouble there, because if they do, they'll clearly be pushing the Americans to respond. There will have to be an international response because the impact on the oil price will be so dramatic. So, it's very unknown what will happen, but my suspicion is it won't be as bad as people fear at the moment in the press, in which case, these high prices we've seen over the last week or two are actually an opportunity to go the other way. So, I wouldn't jump on a short of oil now, but I suspect over the next week or two there may well be a very good opportunity to go short oil and fade this rally, if you like. So, how much higher will they go from here? I don't know, but maybe a few more bucks. I'm not convinced it'll get particularly much higher from here. I suspect this won't escalate as dramatically as people fear, but and rightly fear.
Chris, what about major oil importing emerging markets and emerging nations where, this increase in oil prices could actually exacerbate the balance of payment issues that some of them have because of the kind of money that they have to shell out now per barrel of oil? How does one read into the emerging market situation then on the basis of this?
Yeah, well, I mean, it's a very good point. I mean, really, there's lots of ways to slice and dice emerging market equity markets, but one of the key ways is oil importers and oil exporters, as you allude to. And of course, India is a big oil importer, as are many of the emerging markets. So this is clearly a negative. It's a negative for the balance of payments. But I go back to what I said earlier. It really depends on how permanent this move is and how long-lasting it is and how high the oil price does go from here, which is really all about, as I said, the geopolitics at the moment. So my suspicion is it fades, but if it doesn't, there's serious issues for those oil importing emerging markets. It's a major negative, and to be fair, they haven't started the year too well, so it's another negative on top of that if it comes about.
Chris, before I move away from crude, you said one can look to short crude in the coming weeks. According to you, what's the fair value then?
Well, we think the world is pretty well supplied with oil. Shale keeps surprising to the upside, so there's a lot of chat this year in the last sort of 6 months about whether or not US shale supply is going to slow, the growth of that's going to slow, and our view is actually probably not really much, if at all, and there's plenty of oil in the world. OPEC's clearly keeping a lid on its production, but there's plenty of spare there. So there's loads of spare capacity, there's plenty of shale growth, and the higher the oil price goes, the more that encourages that supply to come online. So from our point of view, the fair oil price is probably $15 or so lower from here, so considerably lower really. So it's an interesting short position. If once you get confident that you think you've seen through all the geopolitical risks, and you know that's a big ask, but of course you can do it with options, which makes it a bit more interesting and a bit more doable and able to stay in the trade. So yeah, I mean, I think $15 or so is lower from here is a fair price given the sort of global oil supply and demand dynamics, and assuming those geopolitics get pushed to one side over the next few weeks. We shall see.
$15 lower from current levels will be somewhere about 55 to 56. But 2019, Chris, was a year when equities globally went higher due to liquidity which was present in the global market. And of course, that was also a year where risk on trade was there. But still, you had yellow metal, that's the gold, surging 18 to 19%. Now, in the current light of events which we're going through, tensions in Middle East, how do you see the global equities behaving? Do you see money moving more towards safe haven asset classes like gold?
No, I think equities remain in a bull market, and risk on will be the theme at least of the first half of 2020. Clearly, we started with risk off, and that move into safe havens, as you described, with gold moving higher, the yen strengthening, and US Treasuries moving higher and the yield falling. But, you know, really, I think the theme for 2020 is cyclical acceleration in the global economy, led by America and actually backed up by Europe, with sort of China really playing more of a supporting role, less of a dramatic role in this global economic reacceleration. And I think once you get that economic reacceleration, coupled with the fact that the Fed remains very loose, liquidity remains good, the repo behaviours ongoing from the Fed, they're continuing to supply liquidity to that market. All of that, I think, is very good for global equity markets. So, you know, even though people talk about them being a little bit expensive, what really matters is the direction of travel of the global economy, the liquidity in the markets, and the positioning. And really, the positioning coming into the end of last year wasn't as defensive as it was in August last year when it was sort of peak defensive positioning, but it was still pretty defensive in portfolios. So, you know, I think that positioning's got to shift back to much more pro-cyclical and pro-growth. And if I'm right about the US and Europe leading a global recovery this year, then we'll see that reflected in equity markets and supported by central banks across the globe. So I'd be very pro-risk in portfolios. I think this move into safe havens over the last week on the back of geopolitics is another opportunity to put those trades of pro-risk back on and use that market wobble and that geopolitical wobble as an opportunity to add to risk in portfolios and add to equity long positions.
Chris, if it's pro-equities even in 2020, it's risk on trade. Does India feature within that in the emerging market basket?
Yes, I think it does. I mean, particularly if I'm right and the oil price softens from here. You know, it is an expensive market, but of course, you know, the Indian economy, I think, is troughing out, if you like, and so I think emerging markets in general will go up, and India will participate. And there's no doubt that in the medium to long term, the Indian equity market is a very attractive proposition. As I say, it's a bit expensive at the moment, particularly compared to other emerging markets, but on that medium to long term time frame, it's very interesting. And if the global economy's reaccelerating, that helps as well, along with global equity markets going up. So yeah, I think India will participate, and I'd be happy to be overweight Indian equities.
Okay, well, that's a bullish voice, all right, on equities in general and select equities like India too, selectively. Chris, good having you. Thanks much for taking the time out and speaking to us. Have a good week ahead.
Thank you. Appreciate it.
Yep. Well, now at the lowest point of the day, but if Chris is bullish, he's not alone. Mohammed Apabhai of Citigroup is hoping that better sense will prevail in the escalating tensions between the US and Iran. In a conversation with Bloomberg Television, Apabhai said that any correction in the markets will be aggressively bought into. He also believes that gold is a good hedge at this point. Listen in.
Overall, though, I think people are still being quite measured in the way that they're looking at it. Like if you look at the market reaction, it's down about 1% off something that was already quite elevated. So I think there is concern, but I think very measured in terms of the market reaction, at least so far.
We obviously had a very good December for risk assets. You mentioned January too, very good optimistic mood then. If I was waiting for a buying opportunity, is this it?
I'm not really that convinced that you're going to be getting that buying opportunity. I think what the other thing is that, you know, in December, for example, we saw a massive expansion of the Fed balance sheet yet again.
Right.
You know, in the fourth quarter, I think we saw something like $330 billion of expansion, reversing almost half the tapering that we've seen. That's the biggest pace of expansion since 2008. So we thought that in early December, you know, because of this repo stuff that was going on, that there might be this pullback, and I think the pullback lasted about 2%. So any pullback that you're going to see, at least in the first couple of months, is going to be, I think, fairly aggressively bought into.
Mo, Tom here in Beijing. When you're looking at gold, it's at its most overbought level now in 2 decades. I've got a terminal showing this. Is there more upside for the yellow metal given the risks in the Middle East?
I think there is more upside for gold, but I think partly it's to do with the risk in the Middle East. I think it's a nice hedge to have. In fact, our commodities desk this morning has been reporting some very significant activity in gold and in oil, as you would probably expect. That's just off the get-go, even before sort of 8:30 this morning. Hong Kong time. But I think the other thing is that the dollar has been weaker, especially since the end of September, and that is also helping gold higher. So our view has been that the dollar would be weaker, at least in the first half of 2020, and that sets up quite nicely for gold, and also that's quite positive for gold, especially when we have these geopolitical tensions making people a bit more concerned as well.
And is that weak dollar then still supportive for EM? Can we assume, particularly, that Asia can be relatively insulated, even if there is a flare-up between Iran, the US, and some of its allies?
Well, obviously, if there's a significant flare-up and there's a significant escalation from where we have over here, then Asia will fall very much into that pattern that we've seen many times before, between the net oil importers, like countries like Japan and India, and the net exporters who may be a little bit more defensive. But at the moment, I think we're still watching and waiting. You know, what I would highlight as well is that there is a calendar effect on this as well. Remember, the trade talks are going to be signed on January the 15th. It's going to be about 2 weeks while we're waiting to see what happens out of this Iranian situation. And of course, we do have this Senate impeachment trial hanging over all of this as well. So there's a few things, a few moving bits that are coming in at the moment on the geopolitical side. But we also have earnings season that's going to be beginning as well. So long as there isn't any real impact from on earnings, and as long as there isn't a very significant rise in the geopolitical discount, then I think we should be relatively okay. But we're obviously cautious and watching this.
Yeah, talking about Brent at $70, do you think the geopolitical risks have largely been priced in, or do you think prices could stay elevated and maybe go even higher overall, given the fact that what we've seen so far, we haven't seen any kind of end game here when it comes to the U.S. and Iran?
Yeah, I think the market is still, I think, pricing in this sort of scenario where, yes, there is a bit of saber rattling. Yes, there may be some action, a little skirmish here or there, but nothing much more significant than that.
So similar to what we saw in September with that Saudi facility.
Correct. Yeah. And you know, one thing that was interesting around that Saudi event was, again, there was anticipation. And you know, some people we were talking to were thinking that oil prices were going to go to 100 and whatever, and they never got anywhere close to that. So I think the market is still hoping that good sense will prevail, and that, you know, things will eventually calm down again.
All right, the company in focus is Dhanuka Agritech. A strong Rabi season is key markets like Andhra and Telangana and Maharashtra has put the company on a path for strong growth in the third quarter. MK believes that the company may register 20% growth on its top line this time around. So let's discuss the prospects of the company going forward with Mr. MK Dhanuka. He is the managing director of the company. Mr. Dhanuka, thanks very much for taking out the time. I'm just going by the headline that I'm reading right now, which is that Dhanuka Agritech headed for the best Q3 in 5 years. That's an MK report that has come out, and I believe that has come out on the back of a conversation with you. So can you highlight for us how has the season been so far, and how is Q3 likely to shape up on the back of that?
Yeah, the discussions were held with MK definitely, and the report is on the feedback from the management. The last quarter was one of the best quarter in last 5 years in the company because of the delayed monsoon. There was moisture in the soil, and the reserves are full of water. So Rabi crop is expected to be very good, and the Kharif crop was delayed. So some sales of the second quarter were spillover in the third quarter. So that's why we are having more than 20% growth in the third quarter, and expect that this momentum will continue. And in fourth quarter also we will be able to deliver similar growth.
Okay, and this comes in from both generics and specialty products, sir?
Yeah, it is both from generic as well as specialty.
Okay. Can you talk a little bit more about how you're expecting newly launched products to do? The new launches, are they also going to be good contributors, Largo, Kempa and Apply?
Yeah, this year we launched these 3 molecules in the Kharif season, at the beginning of the Kharif season, and definitely they were well accepted by the farmers of the country. And all the 3 molecules has done extremely well, I can say, and they have contributed in the top line of the company as well as for the bottom line.
Okay. One question, last question from my side is with regards to the raw material inventory. Have you exhausted all of the high cost inventory that you have? Do you see a bottoming out of margins that we'd seen in the first half?
Yeah, definitely the margins must improve in third quarter as well as the fourth quarter. And by year end, we hope that there should be approximately 100 bips improvement in the EBITDA margin over last year.
Mr. Dhanuka, if indeed this turns out to be the best Q3 in 5 years, what does this do to the year-end estimates? Do you reckon that for FY20 you can cross the 11,150 crore mark on the revenue front?
I have not given this figure, but definitely we are talking double digit.
Do you think you will cross that?
1100 definitely will cross.
Okay, you will cross the 1100 crore mark on the revenue front.
Yeah, definitely.
Okay, and if this is indeed, again I repeat, if it is indeed the best Q3 in the last 5 years, do you think profitability could be as high as 125 odd crores for the year?
You are talking PET?
Yes, please.
Yeah, PET should be 125 crores plus.
Okay, and I'm guessing that you already replied to my colleague's question on margins. The expectation that I think this note and a few other notes point towards is about a 15% EBITDA margin. Would that be a correct estimate?
Yeah, I have already given that 100 bips improvement over last year. So whatever is the exact numbers that we'll be able to deliver.
And would Q4 differ materially from what Q3 would be? What is the typical template, Mr. Dhanuka? You would have a great Q3. Would it be followed by a good Q4 as well? Is it possible to predict that?
Yeah, it is expected that Q4 should be followed by the Q3. This will remain equally good as the third quarter. And the major reason I shared that because of these moisture in the soil and the availability of water for irrigation for Rabi crop. This is the major reason that the farmer is sure that he will get the water for irrigation for the crops. So that's why every inch of the crop, every inch of the soil will be sown, and there will be good demand for the pesticides.
I just wonder, Mr. Dhanuka, that this last 6 odd months or the last 6 months in the last calendar gone by 2019 had a high degree of monsoon-led destruction because of floods, etc. That hasn't done anything to bring about impact for your Q3?
So that has impacted the first 6 months of the FY. That's why the first 6 months were not at all good, and the growth was to the tune of around 3% only. But after September, since the rainfall was stopped, So then the season picked up, and definitely the role of the Kharif spillover as well as the start of the Rabi that has contributed for the third quarter.
Mr. Dhanuka, just one more question regarding your key product, which is the Targa Super. Do you feel that the demand has picked up significantly in this season, and do you see that carrying forward and being a major contributor to you?
Now the product is available from other companies also. So I cannot say that demand has picked up significantly, but definitely there is growth in Targa Super over last year.
So you feel that any new products that you launch could probably go neck in neck in terms of being a revenue contributor to you? If not Targa Super, then?
Yeah, these products which we discussed, Largo, Kempa and Apply, they have contributed significantly in the growth of the company.
Okay, what proportion, sir, to the revenue?
It is around 5% in the top line.
Okay, just about 5%. Nonetheless, Mr. Dhanuka, thanks very much for taking up the time and speaking with us. Really appreciate you joining in. So that's the management there, corroborating the discussion that they had with MK, saying that they will be looking at superior growth in Q3, 20% plus across specialty as well as the generic segment expected to grow well, 411 on the stock.
Well, that's Dhanuka Agri for you, expected to post a better second half of FY20 compared to first half, which was impacted due to extended monsoon. But shifting focus back to markets, 11,986 on Nifty and Bank Nifty also tumbling about 2.5%. Both these key indices are trading below their 50-day moving averages. Good time to bring in our techies and ask them if there is any fresh position that they are advising to take at current levels. We've got Hemen Kapadia of KR Choksey, who joins us right here in the studios, and we've got Ajit Mishra of Religare Broking joining us on the show. Good afternoon to both you gentlemen. Hemen, let me come to you first. Did you buy the 12,000 put on Friday or no?
Very good afternoon to you, Navneet. No.
No?
No.
Okay, you lost it. You know the premium, I was just checking, on this Thursday expiry has shot up by nearly 430%, and if you had the monthly put strike, that's the 12,000 strike, the premium has just doubled. I'm sure a lot of people would have missed out on this, but would you do at current levels? Both these key indices are trading now below their 50 DMAs.
We were in this range between 12,140 Navneet and 12,300, and obviously we've now finally broken down after multiple attempts. Weakness, short term, yes. But after this fall, I wouldn't short the market at current levels. I'd wait for a 50 to 70 point bounce. So I'd like to sell the 12,300 call option, but only at 85. So if that doesn't happen, I would not chase the market on the downside. I mean, there's very apparent weakness. It's weakness all around. No, but after such a fall, I wouldn't chase it down. No.
Okay, so not advising to take any short position from current levels. Ajit, what about you? What are you doing at current levels?
Good afternoon. So I share the same view, considering the kind of fall that we have seen of late, and it's a vertical decline. Though we were anticipating a fall in the index, but not in the way the markets have reacted. So I believe that considering the current scenario, one should wait for any technical rebound. So closer to around 12,100 underneath, I would recommend going short. With 12,200 is a resistance area that's going to be the stop loss, and closer to around 11,850 to 800, that's the target area.
Okay, Ajit's mentioning go short only on bounce, so that's 12,100 he's suggesting to go short from those levels. But I mean, in terms of individual stocks, what are you betting on?
Couple of stocks. Now, once again, no need. I mean, everything has obviously gone like 9 pins, but I think Motherson Sumi was one stock which looks a bit weak, but it's already come off. So I'll wait for a bounce. Sell at 145, stop loss 150, target 135. We've broken down from this distribution pattern between 145 and 150. We were there for around 13 trading sessions. We've broken that on the downside. So on a bounce, it would be a short. And one which, market toppers, you have pharma and IT as a standard defensive. So I would go long on Tech Mahindra, but I tweaked the levels a bit. Buy it at 770, stop loss 765 and target 780. I still feel that some of these IT stocks have some bounce left, and yeah, the picture is improving. So.
Okay, and your heavyweight IT companies like Infosys and TCS, remember, have been supporting the index for the last 3 to 4 days. Ajit, in terms of individual stocks, what are the strategies that you have for us?
So, Ramneet, both recommendations are on the short side. Hero MotoCo underperforming counter from the auto space, but after that a dip of close to around 3%, again, one should wait for any rebound closer to around 2400 levels to go short, and 2465 should be a stop loss, and 2270, that's the target area. And PSU banks, the overall trend is negative, so we have selected PNB to go short, and so 63 is the area where one can go short, with 67 as a stop loss and 55 as a target.
Okay, those are some stock ideas from Ajit as well. Just want to pull up the Nifty PSU banking index, and if you can have the MRR function, there's just one stock in that index which is holding up steady today, and that is Indian Overseas Bank, or IOB, which is up about 4.5%. Rest of the lot is down under. You've got Canara Bank, which is hit the worst. It's down about 6.5%. PNB, Bank of Baroda, SBI is down 4.5%. Union Bank of India, Bank of Maharashtra, Indian Bank, everything is seeing some pain in today's session, which is why you're overall seeing the Nifty Bank 2 down 850 points, 31,223 on the stock on the index. Samir Kalra of Target Investing is joining us on the show as well. Samir, good afternoon. Great to have you. Let's talk about banks, and it looks like the ones that took the move and took the initiative to take the index higher is now what's causing the index to drag. What's your sense?
So I think again, two factors: oil, currency, eventually impacting the bond market, eventually impacting the treasury market. That's let's say a speculative move right now, which everyone's estimating that all this escalation remains as it is or it increases. Any kind of de-escalation is not being factored in at all right now, which I think becomes a kind of an opportunity for people who have not seen this kind of a fall in a lot of big time. So I think it's too early to call whether it moves the same way which it's built on previously on Friday, or it reverses to some extent, because I don't think so. US also wants it to escalate to a certain level because they have an election, and for them, current president for them, I think the stock markets are more important than certain way to create a panic for them. So I think it's better to stick to what you have, do a SIP mode rather than anticipating any further moves on the downside, and be there in the markets. So don't ignore it, because if you see certain mid caps are still not reacting the way it used to do in, let's say, last 3 to 4 months, which a 2% on the index means 10 to 12% on a mid cap stock. So that is not the way it's reacting. So I would read that way much better into banks as well.
Okay. So what you're saying is probably this may not lead to a more pronounced downfall. So
it can happen for a couple of days unless everyone's anticipating some kind of a retaliation from Iran to happen, right? If it doesn't happen in the next couple of days, I think the cool off will be much better off. I think for us it's double impact, because already the crude and currency moves up, irrespective whether any actual action happens on the ground or not. So I think it's better to stay put rather than anticipating any kind of a fear or this escalation. It's better to stay put and just keep holding to your positions.
What happens to some of these companies that use crude oil as a part of their raw materials, and the impact of that? So paint companies, tire companies, oil marketing companies.
See, so for them, for all these companies, a quarter of crude has to be really up for them to get impacted on the raw material. So it's only aviation. But
it also becomes an issue of supply, right, for some of these oil marketing companies? So you don't think that's a big issue?
I think everyone is just moving way ahead. If you remember when Syria escalation happened, everyone estimated the same way it's being estimated out here as well. So I think globally no one wants this kind of escalation as well, and especially if China, Germany and US don't want it, it's unlikely to happen. So I think for me, it's better to stick with what I have right now, and I don't think so any major impact will happen to, let's say, paints or tire companies. Aviation can happen because if 2 more quarters, 2 more weeks of high crude prices, then the month ending will see an increase in ATF. OMCs already, that's the most impacted sector. So I think OMCs and aviations I'll stay away, but paints and tires, I don't see that much of an impact as of now.
Okay. Well, a clutch of other names are correct. I was just looking at stocks which have either gained or lost, more importantly lost in the last half an hour to 45 minutes of trade. And a stock like Vedanta, for example, has fallen further. State Bank of India has corrected even more than what it was, and some of the high-flying stocks, the likes of Adani Transmission, etc., are also coming off in the session today. APL Apollo is down about 4.5% today. Deepak Nitrite is down about 4.5% today. So a lot of these stocks which have done well in the recent past have gone down and have corrected even further and are trading at the lowest point of the day. Banks, the worst hit. HDFC Bank sub 1250, SBI down 4.5%, Axis corrected a little bit. Would you go out and nibble here?
So I would nibble in Axis. I would keep a SIP in Axis. HDFC again, irrespective of whatever is happening today or on Friday, whatever happened, HDFC I'll stay away from this year because there is a management change, and irrespective of whatever the quality of the bank is, quality of management is, there are certain, let's say profit taking by investors who have been holding it for quite long, because there comes a kind of uncertainty in these kind of events, so it's better to stay off. Axis, I think the amount of money they have raised, the kind of capacity to grow on the subsidiary levels is very huge. So I think over there it can be a underdog, at least in terms of the valuations of subsidiaries from here on.
Well, it's interesting. Today, Hemen, some of these heavy-duty, large-cap banking names have come off. Maybe you already alluded to a few in your ideas, but if you haven't already, SBI, Axis, HDFC, is there a trade on any of these?
Well, no, I don't think so, because it's at least when I suggested a few shorts sometime back, it always backfired, and now they've fallen off the cliff. So unless there's a bounce, I'm not sure I would short. Now, coming to State Bank, 340 to 317 in 2.5 trading sessions. No, if it comes to 325, 327, then the risk-reward ratio is in favor. So I'd say too late to sell and too early to buy. So for me, it would be stay away. And okay, now maybe this time is the real thing, but for the last few weeks, every single fall has been bought into Neeraj. Okay, maybe this is, we had local issues. This is exceptional. You have people fighting Star Wars all over the world, but I don't know. And okay, coming to HDFC Bank, the intermediate low was 1235 and we're at 1236, and there's a congestion area at 1228. So no, there's weakness, but I would prefer not to trade. Yeah, if it's a trade, it's a sell on bounce. I wouldn't buy it here, but it's not a short.
2.5% down for HDFC Bank. Remember, it's got nearly 11% weightage on Nifty, so that'll be the top contributor on the downside, I guess, to today's fall of nearly 250 points on Nifty. But we highlighted NIT Tech at the start of the show, one of the stock future which is outperforming. Not only that, the stocks also touched its life highs in a falling market like today's, and we know why the stock's been outperforming in the last 1 month. The board approved buyback, I think, at a price of 17.25. It's 20% paid up equity, so they will require shareholders' approval. But since then, the stock's been outperforming. It's still trading some 75 points or 80 points away from the buyback price so far. Ajit, if I could come to you on the charts, futures also indicating long build-up even at these life high levels. What would you advise someone who is sitting with long positions on NIT Tech? Is it time to book profit, or one can see higher levels from here as well?
So, Navneet, we can still hold to the existing longs, but for the fresh long, I would suggest one should wait for a dip closer to around 16, 20, 25 levels. But for the existing long, definitely, considering the kind of momentum that the stock has, despite what we are seeing in the market across the board, it's indeed showing significant strength. So, considering that, yes, you can hold to the position with 16.20 as a stop loss, and upside let's say closer to around 16.19 to 17.10. That's the immediate target area.
Okay, that's NIT Tech. Let's also talk about Bajaj Finance. Now, that's a big quarterly update which came today, and the stock reacted negatively to that. In fact, it's one of the top losers among the Nifty constituents. AUM growth and year-on-year 35%, quarterly uptick of about 7%. And remember, it's also coming at a time when we've been talking about consumption slowdown, weakness in the economy, but still a 35% number does not look bad at all. In fact, that's what the street has been also mentioning. But there is some sentiment reaction you're definitely seeing on the stock today, because we have seen AUM growth numbers in the last 3 to 4 quarters of somewhere about 40 to 41%. So in the last 5 to 6 quarters, it's come off from those 40 to 35%. Sameer, 35%, not a bad number in a tough market. Yeah. Stocks reacted negatively. Would you advise people to buy at lower levels?
So I would advise a SIP because see, what has happened is that that kind of a quarter-on-quarter growth is tapering off. YOY still they are able to manage 30 plus. But if you see quarter-on-quarter, there is a kind of lower single digits and middle high single digits. So I think that kind of a variation to the valuations which they are running on right now, the sustainability becomes a little difficult, especially when you've done a QIP, and for you now you to grow on that kind of a QIP amount, you really need to find that demand. Now either if in next 6 months or 9 months you're not able to provide that kind of a growth on the QIP amount, so it might tell you that the demand side is not there.
But we are talking about demand side headwinds, aren't we?
There are headwinds, but right now you're able to grow your market share as well.
Right.
So there is a difference between NBFCs raising money. So you are able to get that quality money and sticky money with you. Now, if you're not able to grow on that sticky money, that becomes the issue for the company. Now, then that defines that the credit demand itself is totally gone out of the system. So I think that becomes a very critical period. So next 6 to 9 months is very critical for Bajaj Finance. I would still go with the SIP. I will totally not negate it out. But I think it's a very risky bet to take a lump sum call right now into that.
I wonder though that in a market wherein 3 months ago when everybody was talking about how because of the other NBFCs having been bombed out, you have these 3 or 4 names which will have their choice of growth available to them. And how is it that the market is not seeing it like this, that Bajaj Finance is choosing to grow not at 40-42% but at 35% because they want to maintain prudent asset quality, which should actually be a good thing.
Which is something that they already highlighted in quarter 2, and they said that it's a part of what the company wants to do.
Always.
Yeah.
But see, then if you're even sacrificing on certain quality of demand which you are not retaining. Now my whole point is, if you've raised this much of amount and then again because the stress levels are increasing and they are as in predicted to increase next 6 months, 9 months, especially on the retail end. So then the asset quality is supposed to go down only for the whole pie, right? It's not something you're going to go very different in the way.
They maintain the asset quality even during the ILFS issues.
Yeah, but that's what I'm saying. So you got the premium of that. Now the only point is, if you have to gain market share, right? There has to be certain places where you have to go a little bit more aggressive or give a more leeway to people. Because again, if I've given you that kind of amount and your growth has to go at least 2 times in next, let's say 24 to 36 months. And then even if you are going less aggressive or less
being a bit conservative.
Share, because I'm giving you money for the market share gain. I'm not giving you money to be conservative and go a lower base. So I think the valuations in all.
But won't you say that's all about the timing? I mean, you yourself said it could be from the next 24 months to about 36 odd months.
Yeah, but that's what I'm saying. So the only
they can capitalize on this QIP money throughout these 3 years.
So that's why I'm talking about a SIP. I'm not talking about a lump sum investment. Because next 6 to 9 months will be watched by the large institutions. And if it really doesn't come through, then you might see a lower level on Bajaj Finance as well. So nothing is negated, because right now everything is taken positive for the company and the driven. So right now that commentary takes into while, but if NBFCs on the debt side improve by raising money, certain NBFCs are now able to raise money where people were, 6 months back were not even looking at those papers. So if that improves in next 6 to 9 months and you are being conservative, then you have lost the opportunity. So that's where I feel it's better to take a SIP route rather than a lump sum route.
Okay. The other stock is Godrej Properties. I think this stock has come off quite significantly from highs of about 996 that it touched just a few days ago. From there now down to about 927. So the last few days have not been particularly great for this one. However, for the month, it's still in the green, so about 4.5%. Hemen, what would you do with Godrej Properties? Is there a trade here?
Well, the entire, if you look at the BSE Realty Index, Devinam, I think things seem to have changed for the better. But yeah, Godrej Properties, it's different. DLF has actually moved up one way, while Godrej Properties has generally been an uptrend for the last 6 years or so. So I think it's paradoxical to what's happening in some of the other stocks. We're overbought. There is some crossover sales coming in on the longer term time frame. So no, I'd wait a bit because we're at 926. 915 has been important. If that cracks, we'll be at 840. So I have a feeling that it looks top heavy currently. I would not venture out to buy. In fact, I'd stay away from the next few months actually.
Okay. The other one is LIC Housing Finance, which has taken a sharp cut of about 5% today. Takes its monthly tally down by 2%, 417 on LIC Housing Finance. Ajit, a quick trade on LIC Housing, if there is one at all?
So Devina, yes, this counter has been struggling around this 200 EMA. It made an attempt, I guess, twice, yes, in last 2 months, but failed to sustain above the same. And today also we are seeing a sharp decline. In the Friday session, it tested this area again, and we are seeing that the stock is drifting down by around nearly 5% as of now. So in case of again it witnesses any rebound closer to on, let's say 420-25 zone, then one can consider going fresh short with 440 as a stop loss and closer to around, let's say 385 to 390 as a target area.
There were some announcements on Biocon subsidiary. I think they told us in the subsidiary in True North will now invest 536 crores in that company. I think there's dramatic some money coming in.
For a 2.44% stake.
Okay. Nothing too dramatic. The stock showing a bit of a spike and then cooling off as well. Okay, what else? Global commodities seem to have just reversed this move a little bit of theirs, so that is one space to monitor. The other stock is Z Entertainment. Now 3 days on a trot or a 4th day on a trot now. We're seeing this stock come off for another 4.5%. Ever since those the rules for subscription change or the packages change, Z has been going down, and this is, I think, the 4th day if I'm not wrong, at least the 3rd day if not the 4th day, because I think it fallen 1.5% earlier and then one more right there on your screen. So over 4 days, 5 days, it's fallen 4 out of the last 5 days, which shows you the kind of pain. 12.5% for a stock which is arguably cheap on the valuation front compared to historical parameters. Still cheap, but still avoidable?
Very much. I think that 430 kind of levels were the best place to exit the stock. Because, see, now it's become a regulated industry. Let's first put it in that way. It's a very much regulated industry now, and earlier it was a free market industry. So now the whole dynamics of valuation really changes for Z. And I still feel there's a 20 to 30% kind of a downside which can hit them. Because these kind of norms really don't impact your subscription only, they impact the advertising revenue also. Because when an advertiser comes to the channel, he always estimates what kind of a growth you're doing in terms of subscriptions or the viewership. Now, if these kind of dynamics change and become out of your control, advertisers get more power of negotiation, let's say, in that certain sense. And when you're not able to charge, let's say, 19 rupees, which you were charging for your top channel, and all of a sudden that price in the bundle goes down to 12, that's a 60, kind of a 50% kind of a drop in your price of that particular channel, which was your cash flow. So I think your cash flow right now gets impacted by 20 to 30%. So your valuation also, at least from what the trial regulation started from, have another 20 to 30% drop before they become more reasonable.
Okay.
All right, that's Z for you, which is down 4.5%. Hemen, you want to come in here, close the loop on Z on technicals as well?
6 trading sessions. We've come off no need, so maybe a small bounce within the offing, but I thought 270 was an important swing low, and we breached that. So I'd wait for a bounce till 270 and short, because time being we've had this 1, 2, 3, 4, almost 4.5, 5 week pattern, which on the hindsight obviously we broken down on the lower side. No need. I don't think it would have been easier to say that it's going to break down before it happened. So now it's broken down, and we use 270 as a level to go short. The range was between around 308 to 270 for the last 4.5 weeks now. So we've broken that. I think there has not been enough volume today, but whatever. On a bounce, it's a short around 270, 272.
Okay, on bounce of some 270, I guess one can look to take a shot here. 261, 262 is the level where it currently trades.
I have no hesitation in admitting that Indian women are the best investors, right? Gold prices, gold ETFs are at 52-week highs. Gold is doing so well, and I think the hoards of gold that Indian households hold should act as a bit of respite to portfolios right now. No, frankly, I mean, it's a great investment.
I actually want to pull that forward to Titan, because that will not work well for Titan.
You're again getting back to equities. We're talking about gold doing so well.
It is, right? Because, you know, they said Q2 was hit because the gold prices were volatile. They hit new highs. Now we're talking about a 7-year high on gold again. And, you know, Q3, what?
So I think for Titan, now next 12 to 24 months will be very troubling. It will be very troubling because again the cash flows are from the gold business, and they are doing a lot of capex which they really can't back out from. Okay. So they are into a cash 2020 situation, and this will go on for this year at least, calendar year, if not more. So I think it's better to stay away from a Titan.
You know, I'm sorry guys for pulling it back to equities. But continue your going discussion.
Pessimism. I just thought let's bring some optimism.
Both equities and gold. Last 10-year CAGR on Nifty and gold is the same. It's 8 to 8.5%.
But that might be I think the rupee CAGR might be more, right? Because we benefit from the dollar appreciation as well.
And plus, the only point is, if you see the physical part of it, you're not able to sell off that easy. So that will be, you know, you invested 10 years back. But equities, you invest 10 years back and you're able to...
You cannot beat the liquidity equities
so
offer.
the number of times you might have bought and sold in equity would have been much more higher than gold physical part.
I think I saw you outside the Tanishq showroom, didn't I?
I don't know about that. No, but I'm just saying. So
was it at 1350?
I'm not advocating gold in any fashion whatsoever, but I'm just saying, and maybe it's a good investment, but for small ticket retail investments, I think gold is probably liquid enough as well in a country like India. Yeah. I mean, I beg to differ here. One. And two, I think the option of those sovereign gold bonds, as they might be slightly illiquid, but they track the price of gold. And they give you 2.5% interest, which is quite cool if you want asset diversification.
If you put that post-tax, your savings deposit rate, savings return is almost the same as that. So it's better to put over there rather than getting out anything.
That's the other point. But quite fabulous. And look at, I mean, I was just looking at the reason I brought it up because when I look at the 52-week high-low list, it's all gold ETFs which are right now at top of the pile. So doing remarkably well. You track the charts, right? You want to come in?
I think 6 months ago I said this was going to happen. I won't say like everybody said I told you so, but I did tell you so. Ascending triangle. We've had a 5-year correction, Neeraj. We broke out about 1370. Then we went into a small hibernation mode, and now we're setting the stage for the next round of the uptrend. 1565 internationally is important. I have a feeling we're looking above 1565 somewhere between $85 to $110 over the next 6 months. So I have a feeling there's a big roadblock at 1800, but I think 1670 is something which I would look at in the next 4 to 6 months. Looks good, a very clear buy, but it's moved up by almost $70 in the last 10 trading sessions. I'd wait for a small cool off. I'm not sure if the cool off comes in, but 1565 is resistant. So post that, assuming the supply does make its mark, 1540 is a level to look out for $100 to $110 rise over the next 6 months.
I just want to add, you know who else, are good investors in gold? Not just the Indian women. is central banks.
Yeah, they've bought in the recent
In
past.
2019, they bought, gold purchases stood at 668 tons, which is the highest since 1970s.
Yeah.
So, I mean,
So out of that, Russia, China were the main buyers.
India too. India too.
And India was there, but India
On a comparative basis, they did.
India always likes to
some of
buy
the
dollars rather than the gold.
No, some of the smaller
No,
nations too
actually,
bought.
even in the financial crisis, India really loaded up on gold.
No, we did, but I'm saying recent, if you see last 3 years, Russia and China have really bought it over. And China, any which way, even fiscal oil, they have really bought it over. So I think certain central banks are playing it much more commodity-based rather than the dollar-based.
Okay, let's shift focus back to equities and address some stocks. And we've already discussed oil sensitives with Samir, but pull up HPCL. That stock's down 6 to 6.5%. There is 7% actually nowadays. Low fresh shorting seen on the futures side. It's been trading below all its key moving averages. Ajit, on the charts, would you take a trade at current levels of 244, 245 on HPCL?
So, Navneet, considering the kind of fall that we've already seen in HPCL, I believe IOC is a better candidate at the current levels because for HPCL, the risk reward is not favorable. We have very strong support of 200 AEMA on the weekly chart, closer to around 235. And the resistance area is also closer to around 255 to 260. So the risk reward is not favorable. But in case of IOC, we have hardly seen any movement today. It's down by around roughly 1.5%, and it looks like that it's going to break from this triangle formation in the intraday charts. So with the stop of around 128, one can go short at the current levels with 118 as a target.
Okay, that's the view coming in on a couple of these companies, but just want to pull up Force Motors as well. That's seen gains of nearly 8%. You've got a couple of other companies which have sustained gains actually in a weak market as well. So Fertilizer and Chemicals Travancore, that's seen gains of 8% and very good volumes. Almost 36 to 36.5 lakh shares have been traded on FACT, that is the symbol on NSE. That's Fertilizer and Chemical Travancore Limited. There you go, 8.5% higher, 36 lakh shares have been traded. But having said that, let's find out which are the Fab 4 stocks then for the day which feature in Sharad Dubey's list. Let's go across to him. Hi Sharad, good afternoon.
Good afternoon, Navneet. The first stock is Force Motors. The stock is up more than 8%, seeing its highest level seen in almost 2 months. It came out with its monthly update for December, where the sales increased by almost 53% to 2,517 units as compared to 1,650 units on a year-on-year basis. Up next is Indian Overseas Bank, which is up almost 4.5% after a fresh round of capital infusion was seen to the tune of almost 4,360 crore rupees, and it is the only gainer in the Nifty PSU Bank Index. Up next is Mindtree, which is up almost 1.1% after fresh longs were seen with a high open interest of 18% and the volumes trading at almost 2 times its 20-day average. And the last stock of the day is Dishman Carbogen, which is stuck in the upper circuit of 5% after the company stated in its press release that it will consider share buyback on January 16th. The company has actually snapped its 4-day losing streak as well. Back to you.
Okay, Sharad, thanks a lot for bringing those Fab 4 stocks of the day. Dishman Carbogen has been trading with gains and announcing that it will be considering buyback. The other stock, that's Godrej Consumer, since we are getting a lot of quarterly updates from the managements ahead of the earnings season, by the way, which kickstarts this week. We'll have the biggie Infosys coming out with the numbers. So 1.5% higher on a day when markets are trading very, very weak. Samir, if you go by the commentary, I'm just clubbing for Godrej Consumer and Marico. Majority of these companies were saying, demand will come back in the second half, but that's not the case now. They're saying, of course, monsoons were good. Government has taken several measures, but demand will now come back in Q4. Though GCPL has said they expect, I think, 6 to 6.5%. Maybe that's what one of the brokerage notes is suggesting, the volume growth. How are you viewing the earnings?
So for me, I think consumer staples story was over a couple of quarters back. There were a lot of factors which were helping them for past 12 to 24 months, whether it was GST, they gaining market share at distributor levels, pricing gains certain amount. Now, all those things have come into base. Now they come to normalized, let's say, volume growth. So let's say 8%, 8.5%, 10%, that kind of a bracket becomes very normal for these kind of companies to show on. For Marico, they have their own issues going on. But I think on a whole space as a sector, I don't think so. It'll be very optimistic for me to put any kind of money for next 12 to 18 months, because I don't feel there will be any kind of a big reversal, even if you give these, let's say, income tax slab cards or everything, because these again really have to either increase the reach, which becomes very hard and very cost heavy on them, or again something like a GST has to happen so that their volume throughput at the distributor level increases. So I think over there now that phase has to come where all these guys again look at their distribution channels. So whoever grows that will be able to pull through a higher volume throughput. But otherwise, I think they will be all on the normal levels.
Your top bet in the pack?
So my top bet still will be Dabur. But again, I would not like to put money here. I would still like to see next 6 months how they grow and what strategy they have on the distribution channel, and then see, reevaluate it.
We have one more entrant in the green club today. It's so small that every time a stock moves into the green, it's worth noticing. Power Grid is 0.25% in the green, if that is any solace. But yeah, interesting move there. The couple of strong stocks actually, which are trading well today at the broader end of the spectrum. One of them is Phoenix Mills, should come up on your screen. Unless I'm wrong, it's in the green. The last time I checked, it was. Aarti Industries is the other one in the specialty chemical space, which is trading in the green. And these are signs of some very strong moves in these names, because on a day like this, when the Nifty is down 2%, these stocks are trading marginally in the green. It's quite interesting. Not all quality real estate, not all quality specialty chemicals is trading in the green, by the way. Godrej Properties is down, Deepak Nitrite is down. So clutch of other names are down, but these two seem to be doing well for themselves. Both fundamentally and technically. A quick view here. First, do you track either of these two names fundamentally?
So Phoenix I own.
You own, okay.
Yeah, and
you'll continue to own it?
Yeah, I continue to own it and top it up certain times, depending on the quarterly results. Because I think they have a very unique proposition as to an investor. And I think if retail side is growing, especially in India, when everyone like H&M or these kind of guys kick in, that's the best proxy, according to me, which you can play through. And Phoenix Mills is proving that way. So I think it's better to fix it. If you have to really go for real estate, I think Phoenix Mills becomes one of my top positions over there. Aarti Industries is fundamentally really strong. They are doing a lot of R&D as well. So for any kind of chemical company to grow is two-way. Either you keep on adding capacity, right? So that becomes a capex heavy system, or your R&D spends increase. That's where Aarti is pushing their bracket, and the new product launches which they are impaneling or they are working on, that benefits them on the, let's say, year-on-year growth to come on. So I think that's where even your cash flows are much better in Aarti as compared to Deepak Nitrite as of now, if I remove the Deepak phenol, that kind of substitute. So I think Aarti is a better bet in the chemical side, and Phoenix is, which I own in real estate, and I think is better off.
The other one is GMR Infra. It's been relatively stable, so to speak. The last 7 days, the stock's given 7%. In the last month or so, 11%. 6 months, it's been up about 50%. So you've seen big moves coming into this one.
Yeah.
Do you see more interest here? And what's the big play going to be on this one?
So I think, let's say, it's more of airport proxy which is happening out, and their subsidiary, being sold off to a certain chunk to private equity and money infusion over there, and they fighting for new projects from here on. I think, and even the land monetization at the Delhi airport is the big trigger for them. And that's where some kind of a debt reduction plan might be there in offering. But I think it's too early for a fundamental investor to kick in and look at it at a more prolonged, sustainable proposition.
What about a trader, Hemen?
GMR.
It's stayed resilient in the last few days.
Yeah, frankly speaking, if it wasn't such an untouchable stock, it looks good. 10 to
okay, leave the biases out, Hemen.
Okay.
Let's just look at the charts.
2014 to 2020. Range is between 10 and 25. It's forming a rounding bottom. A rounding bottom is technically a bullish formation. So if I were to anticipate, it's a buy. If I were to wait for a breakout, it's about 25. But yeah, if I go purely by technicals and dump the biases, it looks good.
Yeah, it's seen some buying the last 2 or 3 sessions, I must say. Though, so has Suzlon, and there was a story that we did on Suzlon. That stock is up about 18%, not comparing the two. And then the couple of other auto stocks that I think David was talking about earlier, SMLA Suzu 5.5% or 6% higher, and Force Motors, which is up about 8%. So a couple of these names have had some decent numbers and doing well. The other one is Godrej Consumer, the management of which you will hear tomorrow on BloombergQuint at about 9:45. But GCPL seems to be doing okay for itself. So watch out for that name too in the session today. Good going out there for those names. Well, let's wait and watch what's happening into some of these names. Ajit, very quickly, a Godrej Consumer or an Aarti?
So I would prefer Aarti. Neeraj. It has hardly witnessed any profit taking from its record high in last 8 months. So we are seeing a corrective move, but the overall trend is still positive, and in fact, it's on the verge of fresh breakout. So at the current levels, also one can initiate fresh longs, considering that it's almost on the verge of the same. So 820 should be a stop loss, and closer to around 940 to 960, which is the record high area, is a target position.
Okay, that's Aarti Industries. The other stock, I guess, which is recovered from the lower levels is Shree Cement. Put up that stock. Remember, just a few days back, we did see a big rally in all these companies, be it the metals or the cement companies. Samir, within the cement pack, you've liked this company for a while. I think for the first time, they raised money since the time they've been listed. Debt-free company, do you still like Shree Cement at these valuation, or now at a time when people are saying there is so much of thrust on infrastructure, would you look at undervalued players from the likes of ACC Ambuja?
So Navneet, all this infrastructure built up, the story was there since 2014, let's say, in that certain sense. And I think for a long-term investor, it's always better to pick the more cash flow generating company within the sector. And Shree Cement has maintained that cash flow even after doing such a large capex in last 5 years. And they again plan to do a couple of capexes in the next 3 to 4 years. I think now, because it's an industry where capex is continuously required and cash flow drainage happens very big in terms of long-term horizons. So I think it's better to stick with Shree Cement. There can be value propositions underneath, but I would still rather be a 20-25% late in that if fundamentally they recover, rather than jumping on right now over there.
Okay. That's what you've got, Shree Cement there up on your screen. We'll talk about a few of these IT stocks as well. And before that, just a quick look at the Nifty IT index. And within that, the last few days for HCL Tech has not been bad. You've seen the stock moving up, holding steady ground, and probably even doing slightly better than some of the larger names too. Today's session sees a pullback of about just 0.5%. Relatively a more safeguarded space in a falling market right now. That's the IT pocket. Samir, HCL Tech versus TCS Infosys. Now you're going to start seeing results coming out. Quarter 2 wasn't bad. And the fact that it's priced more attractively than an Infosys and a TCS, does it propel someone to go ahead and buy it?
So I think HCL Tech will give you more capital appreciation as compared to an Infosys or a TCS, given a reason that the recent acquisition which they did add to a certain number of clients which they have, but the value proposition which they bring on the digital front, that was very heavy in terms of the products they have acquired. So I think HCL Tech can really surprise you in the next 12 to 18 months, but it's not something which I'll anticipate and invest in. I rather keep a quarterly kind of outlook over it, because that has to again get repaid as well. You have taken a certain amount of cash flow utilization out of it to attain that. Next 6 months, I think still Infosys is better, but on a long-term horizon, HCL Tech might outperform and surprise everyone.
I wonder, so in the run-up to the results as well, Hemen, does HCL Tech look strong enough? The expectation is that it will be the best delivering large cap IT name this quarter 3. Can it gain on the charts?
Well, yes, it doesn't look that convincing, but if I have a simple yardstick, if this is a stock which is within striking distance of its all-time high, almost there, so I guess that makes it the strongest of the lot. So yes, I think HCL Tech can do well. Yeah.
Okay, that's HCL Technologies. Well, CARE ratings. Remember how the rating companies were going up last week, so profit booking seen at higher levels. Care rating is down about 10.5%. You've got something like KRBL, which has gone down 10% in trade. Just recently, there was news that the promoters had bought 0.5% stake through open market. Igarshi Motors, another outperformer of the recent past, is witnessing profit bookings. Even from the broader market, pockets which were started to move higher have started to witness profit booking in a weak market like today's. And of course, India Bulls Housing, being a high beta counter, is your top F&O loser also as we speak. The stock's down about nearly 7.5% to 8%. We've not spoken about Adani Ports, I believe. Let's just pull up that stock. Brokerages have given a thumbs up, I believe, for the acquisition of the port, Krishnavaram Port. The valuations, EV by EBITDA, what the brokerages have compared 1 year forward, that's FY21. Adani Ports is trading at 11.2. Acquisition has happened at 8.5, 8.6. How do you view the counter? Do you expect the gains to come by in the near term when they've said the deal will be EPS accretive right from day one?
So I think the acquisition is strategically good for them. In the long term, it will help them because they've gained the market share by at least 5%, which is very difficult and costly if you do it organically. So I think on that basis, comparatively, they have brought that market share at a cheaper cost. But again, for me, Adani Port becomes a value proposition only when the cash flows start increasing. And I don't see, the global cargo industry reviving anytime soon. Because if the movement is still very low and very tepid, I don't think so Adani Port will increase that cash flows very substantially in the next 6 to 9 months. LNG terminal is one thing which I'm more interested in over there. And if that comes on and give us 6 months from there being operational, I think then Adani Ports will become a really good investment bet.
Okay, Ajit, you want to comment on Adani Ports on the charts?
So, there's no doubt the stock has been holding very strong, and in fact, it has breached its crucial resistance zone of 200 EMA on the daily chart as well. But sustainability is the key. So, at current levels, you may hold to the long position, but for the fresh long, one should wait whether the stocks manages to sustain about 385 levels decisively or not. And in that case, 370 should be the stop loss. Upside is capped because the stock has been hovering in a range from last couple of years, in fact. So around 415 to 420, that's the area where it has very strong resistance.
Okay. That's Adani Ports for you. 3 months, it's still down about 3.5%. Time now to take a look at what dealing rooms are recommending this afternoon. Darshan Mehta, he's joining us with his channel checks. Darshan.
Yeah, Devina, the first stock that dealers are talking about today is Biocon. No doubt the counter is down almost 5% in trade currently, but they just announced a deal with True North, which values the biology unit at close to 22,000 crores, slightly lower than what the market was anticipating, anywhere between 25 to 30,000 crores. But nevertheless, finally, some bit of deal that's happening. It's been in the pipeline, valuing the company, and now there is anticipation of more investors that could come in. So this is the first stock that dealers are talking about. HDFC Bank of late has seen several amount of selling. Some of the large FIIs have been sellers, not only HDFC Bank, but some of the prominent banking names is where selling is actually happening. So that is one counter that dealers are talking about. And finally, Adani Ports, no doubt the acquisition was extremely strong, EPS accretive. The analysts do believe that the port, the Krishnapatnam port, will aid the financials of the company. But due to market conditions, again, flat in trade, dealers anticipate that there could be accumulation that could be coming in, but overall they believe that the deal is extremely positive and should be beneficial to the stock.
All right, thanks a lot for that, Darshan. So these are some stocks that dealers are talking about this afternoon. Should also pull up the currency at this point. Remember, there has been a sharp weakness this morning from yesterday's close of 71.81. It's 72.04 now, so about 1/3% since morning trade. Not much of a change, but it's looking weak this afternoon. A quick look at the currency, Hemen.
Well, it's been biding its time for so long, Devina. It's been almost a few months, multiple months now. The range was between 70.20, 72.20, and now we're on the cusp of a breakout. So I believe even the longer term charts seem to suggest a clear upward bias as far as the dollar is concerned. Okay, we're in the early part of the month. If these charts were there at the end of the month, I would be even more conclusive, but yes, it looks good. 70 to 20 is a supply point. Above 70 to 20, we are heading towards 70 to 60 and 73.40. So looks good, set for a breakout. Once it closes above 70 to 20, I think there's a clear upside there, Devina.
Okay, that's the currency for you, which has been depreciating in the last two sessions owing to the tensions in Middle East. Just looking at a couple of other individual stocks, New India Assurance, I think that's holding up in the positive territory despite of the weakness seen for markets overall. That's up about 2 to 2.5%. SBI Life, so I think insurance companies are doing better than the rest of the broader market. So that's just also holding up to the gains. And something like Divi's Laboratories, that's also up and about. But overall, I think Shankara Building Products, it's a beaten down counter, not to forget, but that too has seen some gains, about 10% in today's trade. On the losing side, Bajaj Finance, no recovery seen, still remains the top loser. NBCC, among one of the F&O stocks, has seen some shorting, so 7% down there. And Canara Bank, RBL Bank, banking stocks have seen a sharp cut in today's trade. Having said that, let's get you some closing strategy. Just 10 minutes to go for markets to shut shop. Ajit, let me come to you. BTST or STBT for tomorrow's session?
So Navneet, I'll go with STBT, and the stock is ITC. It's trading closer to its 52-week low, and after hovering in a range, it's set for a fresh breakdown. So the risk to reward is favorable. With the stop of around 238, one can initiate fresh shorts at the current levels with 228, 226 as the target.
Hemen, your closing strategy?
A BTST on Britannia Industries.
Target, stop loss?
1% stop loss, 2% target.
Okay, that's Britannia for you. Equitas and PFC are the other two stocks, I think, which is fallen in trade. And I also want to pull up MCX. I think we highlighted the stock at the close on Friday. It had touched 52-week high on that day. 12.11, of course, with markets being weak today, the stock has corrected 2%. I mean, I just want to come back to you on MCX, which touched 52-week high on Friday. Would you use today's fall as an entry opportunity here?
Yeah, we're at 12.11. I'd wait for 11.90, but yeah, I'd use this fall because we remain safely ensconced in a longer term uptrend. Now need higher tops, higher bottoms, and we're just getting out of a 2.5-month consolidation. So it seems to have done some base building over here. Yeah.
Okay. Keep an eye out on all of those names out there. A few more names. KPIT Tech for one, now down to 88 from a level of 100 just a few months ago. That's lost out significantly. We've got Parag Milk Foods at 139, as losing out about 46% in the last 6 months of trade. IGL, remember most of these gas companies, MGL, IGL, Q2 was a good quarter. You saw some interest coming back into these names. We'll have to wait and see how Q3 shapes up for them. But today's session down about 1.5%. But overall, still not doing all that badly. But in the 6 months gone by, 38% higher for IGL. MGL, on the other hand, is up about 30-odd%. Ajit, IGL, MGL, anything that you trade on?
So, Devina, in fact, I'll prefer Gujarat Gas, considering the kind of momentum this stock has. The other two counters, IGL and MGL, they are witnessing profit taking after making a record high. I feel that Gujarat Gas still have potential to maintain this momentum. And in fact, if you'll notice that in today's trade also is trading in green. With noticeable rise in the volume. So any dip closer to around, let's say 340 is an area where one can initiate fresh longs with the 230 is a stop loss and 260, 275 that's the target area.
Just want to pull up Kamath Hotels. There's a press release which has been sent to the exchanges that they have defaulted on the interest payment of about 296 crore, and as a result of that you are seeing that correction coming by just when the release hit the exchanges website. So 34.35 for Kamath Hotels is just fallen on back of some news.
All right. Just a quick word on some of these insurance companies now, be it general or life insurance. That's the theme that worked well in the second half of 2019. Is that the theme that's going to lead in 2020?
So I think for me as an investor, I think life insurance plays a better part than general insurance because, and especially in that, for me, HDFC Life becomes the top pick. Because again, the cost of acquisition of one policy becomes much more efficient at HDFC level. And comparatively, if you see the kind of valuation they get in terms of per policy holder is much more beneficial from HDFC. I think the bank channel really helps them over there, and it becomes more of a pull product rather than a push product. That's why the margins are better, the kind of annual premiums they get, the first year premiums they get, the growth is much more sustainable and the market share gains are much more there. So I think I'll stick out my neck and still keep on investing in HDFC Life rather than anything else.
We'll leave it at that, Samir. Thanks much for taking the time out and being with us today and giving us your thoughts. Well, some SIPs recommended in select stocks by Samir Kalra. But I must say, as we wrap up the show, Bajaj Finance is ending the day as the worst performer, 3989. Clearly, the street seems to be a bit disappointed with 35%. Let's see if this same state stays tomorrow or no. As a collateral damage, Bajaj Finserv 2 has gone down. I believe Maharashtra Scooters and Bajaj Holdings 2 would have corrected a bit in the session today. And voila, there are 4 stocks in the green as we wrap up the day. And a couple of IT names and a Dr. Reddy's also making their way out there. Titan ending the day at the highest point, 1.6% higher. If you were by any chance long on Friday on Titan, Ajit, and you're still holding on to your long, would you carry home the long position?
Neeraj, yes, I'll continue, that long position, considering that we have very strong support of 200 EMA on the daily chart. So the risk to reward is still favorable. The stop loss is at 1140 spot. And upside, we still have potential in case if it witnesses any uptick, closer to around 1195 to 1200. So yes, but with a very strict stop at 1140.
Okay. And while there are not enough stocks at 52-week highs, I must say some of the IT names are just starting to turn around. I know we spoke about IT just about 20 minutes ago, Hemen, but between TCS, Wipro, HCL Tech, etc., would you initiate a BTST right now, just looking at the last 20 minutes trend?
You said TCS?
Or a Wipro or a HCL Tech, whichever the large cap IT names.
I think Wipro seems more like a BTST.
Okay, so watch out for Wipro as a name as well. The other ones which are correcting today include an Exide, which has just gone off the boil in the last few minutes, so has corrected slightly more, and just a sharp drop like a rock for Exide, 180.90, and just a pull back out there. Ajit, you track this one on the charts, Exide?
Neeraj, this stock has been hovering in this range of 170 to 195. It has tested the upper band of late, and we are again seeing the stock drifting lower. But I believe this time 175, 170 zone is going to be a very strong support area. So in case if it witnesses any further decline closer to around 175 mark, it's a buy candidate with 170 as a stop loss and 190 to 195 that's target area.
All right, let's start wrapping up the markets, and it's not turning out to be a great day. It's not turned out to be a good day, and it's not turning out to be a happy ending either. Let's wait and watch if tomorrow changes anything. But for now, 220 points, almost 2% lower for the Nifty and the Sensex, and 2.5% for the Nifty Bank. And I think the broader markets too corrected today, so the market breadth too would be adverse, almost 2% apiece. And this was not unexpected. We only wonder why didn't part of this happen in Friday's session, to be honest. The large caps, let me talk about them first and show you what's moved. Hardly any gainers, so not worth talking about. Titan is the only one which was there, but a lot of losers and financials leading the chart. So Bajaj Finance on specific news, by the way, the AUM growth numbers came out 4.5% lower, maybe lower than what the market anticipated. SBI has taken a pause. Global commodities like Vedanta have gone down. Yes Bank, IndusInd Bank from the banking names correcting, IndusInd Bank correcting, Hindalco from the global commodity names, Coal India from the commodity name, BP and the others too have corrected, by the way, quite a bit. And then the likes of Maruti, Axis, etc. So across the board, you had pain. It'll be very interesting to see which are the top contributors today. I still think that the likes of Reliance, HDFC Bank, and maybe those three, and maybe a Bajaj Finance would be there. But across the board, there has been pain, and it's no different, Navneet. at the broader end of the spectrum either.
That's right, Neeraj. Well, it takes hardly a day or two to wipe out all the gains. On Thursday, we were talking about 12,500, but we are back below the mark or around the mark of 12,000, the key level that got breached in today's trade. But talking about the broader markets, Nifty Midcap underperforming today, down over 2% in trade. Let me still begin with a couple of gainers. NIT Technologies, we've been talking about the stock, how in a falling market as well, the stock's been touching live highs. There were a lot of long positions coming in on the future side for this stock. Of course, the stock's been moving higher after announcing a buyback at 1725. The other IT, mid-cap IT company, and remember, these two were the outperformers even in the December series. So Mindtree was also up and about in a weak market. Godrej Consumer came out with its Q3 update, and post that we did see some positive reaction, though they said the demand headwinds continue and they expect some bit of recovery to come by in Q4. You had Fact, which went up in trade, and this one, despite of falling markets, sustained the gains throughout, and look at that, it's closing around the day's high level, 46.5. Force Motors came out with its December monthly sales number, where sales went up by 53%. As a result of that, you saw a positive reaction. Also, this one went up a good amount of volumes as well. On the losing side, there were a lot of stocks which were moving higher in last few sessions, so they started to witness profit booking. One of them was Care Rating. That stock fell by about nearly 10% in trade. You also had India Bulls Housing. Wouldn't be surprised in a falling market. This is a high beta counter. This always falls in a market like today. So 8% lower here. HPCL oil sensitives were in focus, and this one among the oil marketing companies witnessed huge amount of shorting as well. Your PSU banks were weak. So PNB and Canara Bank both were down in the range of about 5 to 6%. And also from the banking space, you had something like RBL Bank, which went down. And stocks like KRBL, which were witnessing some recovery from last month, gave up the gains today. That was down about 10%. And also from the auto ang space, you had Motherson Sumi, which reacted quite sharply on the downside, closing with cuts of about nearly 4 to 4.5%. And key levels being breached in both the key indices, Nifty Bank. I think we're closing below the 50 DMA.
Yeah, and we're closing below 12,000. So that's another damn squib on today's session. So about 237 points given up on the Nifty 50. Nifty Bank has been taking a bigger hit in today's trade, about 2.5% lower. That's 850 points. Nifty PSU Banks is, I think, just one that's doing okay, and that's IOB. The rest of the entire pack, including an SBI, which has been down about 4.5% in today's session. So it's not looking really great after today's session. And like Navneet said, last week conversations were somewhere around 12,500, and now you're back to levels of under 12,000. But that's what you've got on the index contributors. Well, we've got just a few names there. I think these are the only 4 that entered in the green. So really no takeaways from there. Amongst the losers, heavyweights, the HDFC Twins and Reliance Industries pulling the index lower.
Yep, and pull up India VIX as well. Remember, it's moved from those levels of 9.5 to where it is now in just 6 sessions. And fresh buying was coming into the markets because VIX was at its support levels of 10 to 11. But that's not the case now. Let's see what happens in the coming days, because we're also moving into the budget session where VIX usually tends to move higher. So 16.5% higher after perking up nearly 10% on Friday. In terms of market breadth, goes without saying, it was firmly in favor of the declines right from the word go in the morning. If you look at the entire listed universe on National Stock Exchange, I think when we opened, the ratio was somewhere about 1:6 in favor of the declines, and that was maintained throughout the session.
I think, guys, we can have the advanced decline ratio. Navneet gave an entire speech, and we didn't have the chart.
Yeah, I think the ratio was maintained.
That's what you got. Yeah. So 1:6, almost in favor of the declines. But turnover, and we've been talking about how shallow this market has been. There's not been much of volumes because of the holiday season, but everything kicks back into action come this week. Everybody's back from their holidays, and what a disappointing start to that. 30,700 on the cash market side. F&O about 12,96,000.
Yeah, this is lack of participation on the buying side, I believe, which was coming in the last few days. We would have hoped for a better turnover around the range of 36, 37 today.
All right, let's get in quick closing comments from Ajit and Hemen. Ajit, I'll come to you first. We've got a sub 12,000 closing on the index. What should we watch out for come tomorrow?
So, Devina, though the Nifty managed to sustain above this 50 days EMA, but Bank Nifty is definitely underperforming, and that's a sign of worry. So I would suggest continuing with the sell on rise approach, at least on the index. I doubt there will be any strong up move, at least in the near future, and possibility of index testing 11,800 is very strong, considering multiple time patterns that we have not only in the intraday chart but daily and weekly as well. It's a sell on rise market. 1100, 800 is what we are eyeing.
What do you think, Hemen? Is it a sell on rise market? I mean, it is a single day fall that we're talking about. So are we going to change our views in totality? I mean, we were positive up until Friday, I guess.
Yeah, but I think this week is going to go for a toss because the way with the levels have broken and the VIX has moved up, and like Navneet said, we're going to move closer to the budget, so the VIX is expected to remain elevated. But yeah, tomorrow I think there's going to be a bounce. Whether it happens early on or it happens at the end of the day. But yeah, I would agree with Ajit. I think it's a sell-on rise sort of a market. One should not get too overbought, but yes, it's a sell-on rise, and it's going to take a few days for sanity to prevail and stability to come in. So ideally, frankly speaking, it's a no-trade zone unless there's a bounce. And even if there's a bounce, one needs to be slightly careful.
All right. I just want to quickly, before we wind this up, and we're almost there, but just a quick glance across what Europe is doing and how the Dow futures are indicative of. So we're going to base our assumptions on what we do, depending on how these markets are trading. Dow futures down about 190 odd points, closer to 0.6% under. Hemen, Ajit, thank you very much for joining us this afternoon. Really appreciate your time. Well, on that note, we're going to wrap up Countdown from Neeraj, Navneet, myself, and the entire team. Let's put this show together. Thank you so much for watching.